This is a podcast produced for EIS Platforms Limited, trading as growthInvest. It is not intended to be a financial promotion of any sort and is intended for financial professionals only. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early stage businesses are high-risk investments and you are unlikely to be protected if something goes wrong. Don't invest unless you're prepared to lose all your money.
Hello and welcome to the Alternative Thinking Podcast with me, Melissa Griffiths,
and me, Steve Dobson.
This is a podcast that takes a deeper dive into the alternative marketplace and explores topical issues. Today, we're delighted to have back Iain Baillie, founder and executive chairman of Asset Match, and Veronika Oswald, commercial director of JP Jenkins. Moving on from our last podcast, we were starting to talk about PISCES, and obviously will have an impact for both of you with your various venues. So just to sort of have a little bit of a summary of what PISCES is.
The initiative was begun under the last government, in fact, and has been taken up with enthusiasm by the current government. It's a Treasury and an FCA initiative to build a appropriately regulated environment for the trading of unquoted equities. Mm-hmm. So it's, you know, largely speaking, it's what Asset Match and JP Jenkins have been doing for some time, but with the FCA putting us in an appropriate regulatory regime, and very much the objective is to enlarge the investor base by getting people comfortable with the level of information that they're getting on these companies. As we said in the last podcast, you know, our respective client base have been heavily high net worth individuals, mm-hmm. and I think the you know, what we hope for is that will be expanded into more high net worth individuals, but also smaller institutions and family offices.
And I think there is talk as well, isn't there, of it even falling through into some pension allocations and possibly as a way to come in as well.
Yes, I think there's been a lot of talk. The Mansion House Act has been talking a lot about pension funds investing into private assets. We're still waiting to see the results of that. And hopefully the PISCES is going to be a solution there. But yes, there is still, I think, a lot of work required.
Yeah, and it's seen as a stepping stone, isn't it, almost, which I think's the interesting bit is it a stepping stone, or is it potentially going to be, you know, a stepping stone into AIM, I was going to say, but is it actually going to be in conflict with AIM? I mean, that's something else that is probably...
Yes.
I don't think it'll necessarily be in conflict with AIM. I mean, I think AIM works very well for some of the companies that are on AIM and doesn't work quite so well for some others. You know, the number of companies on AIM, I think, has gone from 1,700 to 700 over the course of the last 20 years. So, you know, there's been a lot of that already happening. I think, you know, more importantly is that this becomes an asset class that there is an institutional following for.
Yes.
And hopefully, you know, we will need to put out more information. The companies will have to be prepared to share more information, and with that process, we can grow the investor base. The UK capital markets have suffered a pretty severe diminution of risk capital over the course, really, since the crash, and that needs to be regrown. And the Mansion House Accord and some of the rumoured changes to cash ISAs and things like that, you know, is, I think, all part of that process. And PISCES is also a small part of that process.
Well, and it is this idea that, I mean, we discuss it regularly on the podcast, that only 4% of pensions are actually in the UK, isn't it? There is, we've had massive outflows. We talk regularly about the lack of IPOs, M&A, etc. I mean, there is a real need to drive capital markets in the UK.
I mean, if you look at US and even the Nordics, you've got so many individuals investing.
There's a bigger risk appetite into equities, isn't there?
Absolutely much bigger risk appetite. And I think what we're both trying to do as both venues is really bring that excitement back to stimulate the markets, because the more companies we can bring in, the more excitement, the more investments, and it really starts to turn the wheels. It's kind of a self-perpetuating motion where you get more companies joining the venues, and hopefully they will go to an IPO. The way we look at it from JP Jenkins' point of view, we really would like to stimulate the market where we do start helping private companies to understand how markets work, and that yes, there are rules and regulations that they will have to adhere to, and hopefully get them to that listing point so we can then work with the brokers and other city
It's good practice, isn't it? Before the listing, because they're going to have, if they're going to go down that route, they're going to have to get used to it and perform those tasks.
Under promise, over deliver, and just continue telling investors and shareholders what are you doing, rather than just taking, let's just say, the EIS investments, and you've seen the amount of capital, how much is locked in the EIS, and the level of liquidity is just really low. It's how do we get these companies to really start acting as a shareholder-owned businesses, not founder-owned businesses. That is the important part. Whilst not making it overly regulated, that's always my worry when it comes to the FCA getting involved, is how do we keep that level of regulation in line to what those companies need.
Yeah, and be competitive,
But it's also the cost element as well.
Very much
I mean,
so.
I think this is one of the main, barriers to people IPOing.
100%.
Is that it's a huge expense, isn't it?
Oh, it's so expensive.
And
it's
obviously
listing, it's the accounts they've got to do, everything.
The audits
are
are just so expensive. And we would encourage companies to have audits. That's really the minimum you can do. But if audit costs you, let's just take someone like, I don't know, Superdry or some of our previously listed businesses, we're talking millions of pounds just for the audit fees.
Yeah. I think one of the problems with public markets has been particularly in London, is the size of the institutional client base is so huge that the size of a company for them to look at, really needs to be multiple billions before it can fit into their their investment criteria. So, that's become a big problem for public markets, and part of that is the cost, the cost of IPOing, which is huge, and I mean that's absolutely fine if you're raising a substantial amount of money as part of an IPO. But if your sole purpose is to try and provide your shareholders with some secondary liquidity, it's a very expensive way to go about it.
There was a perceived risk with PISCES that companies will stay private for longer. Now, is that a risk? We don't know anymore, because, as I think we've gone from companies taking 7 years to go public to probably closer to 10 years now.
Yes.
And I think Goldman's came out with a recent piece in May talking about soon we won't be talking about private and public. We'll just be talking about good opportunities in equities and good opportunities in credit. So is it really an issue about companies staying private as perceived previously? Everyone wanted companies to list because that's the exit.
I think that horse has probably already bolted, to be honest. As you say, it's taking an increasing amount of time, and more companies are finding the opportunity isn't there. And the disappointing thing we're seeing is an awful lot of trade sales, an awful lot of sales to private equity.
Yeah.
So, these are UK companies, growth companies, that suddenly cease to be owned in the UK. And so, providing an alternative so companies think that they can grow in a user-friendly environment and delay that ultimate decision for a better time is a hugely positive thing.
I would also debate whether the IPO is true exit scenario as well. I mean, my first decade was really spent in the public markets. And let's just be honest, as soon as you start exiting, your share price typically suffers as well. So very often when we talk about the exit solution, especially for perhaps some of these family-owned businesses, the public markets would not really be suited because there's just far too much volatility. I don't know, Iain, how you feel about the market-making system and the risk tolerances these days as well. you typically see very large spreads on share prices of some of the small cap companies or the Aquis listed businesses. I mean, in some instances, you've got a spread of 70%, which, you buy something for £1 and then tomorrow or straight after it's down by 70%. Yeah. It doesn't particularly work for some of the businesses. And this is why we see that transition. In terms of PISCES being a competitor to the public markets, or how is that going to pan out? I think there's been a lot of initiative out of the London Stock Exchange where they're branding and marketing the PISCES as their own invention, which is rather obviously quite upsetting for our...
Just to be clear, it's a framework that
exactly
yes,
can
which
adopt.
you all opt into,
exactly,
don't you? And both of you are opt-in.
Indeed,
Yeah.
we are. And yes, to see the news where London Stock Exchange is talking about, they own PISCES, they bringing out, is quite upsetting for our teams, because we feel like, well, we've been doing this for a number of years, decades in certain circumstances. So it's always a little bit challenging, not to mention we all work with the brokers that already participate through our venues, and they often say, well, why is London Stock Exchange, which is supposed to be focusing on public markets, now venturing even into more complex area that is private and not focusing on solving the challenge in the public markets, which is their job.
Yeah.
I would like to say we're going to try and stimulate the capital markets. I don't see it as a major competition to the public markets, but it depends how the whole city embraces it and the institutions embrace it, and whether the venues will be encouraging the clients to actually go to an IPOs.
And that's where I was going to go into a bit more of the details. So obviously it is this idea of intermittent.
That's right.
It could be intermittent.
We're going to have to cut that. It's this idea of intermittent trading windows. So for both of your venues, that's something that you're already doing. Will there be any changes you have to make, or everything's pretty in line and you carry on as normal?
I think some of that will become clear. First of all, PISCES is a sandbox for 5 years.
Yeah.
So, there will be changes that take place in protocols and in regulation over the course of that period. And as we go through the application process, so the application process has really just begun. The legislation was enacted at the end of May, and we, and I'm sure Veronika, are working with the FCA, putting together our rule book and the various bits and pieces that will be necessary to become a PISCES operator. Our expectation is that will be finished by the end of this year.
Yes.
And hopefully there will be some PISCES trades in 2025. And I think that's kind of touch and go probably, but hopefully that'll be the case. And are we going to have to change how we operate? Again, I think that will evolve. But as I said earlier, our model is and always has been intermittent trading.
Yes.
And so we will carry on providing that to our clients, hopefully with an enhanced level of research coverage, of information coming from the companies, as we said earlier, to try and grow the investor base. But we're not expecting a significant change in how we operate.
No.
So will that replace your existing venue or run alongside?
I think that's not clear, actually. Right. Our hope, and I think our gut feel, is that there will be companies that are happy to be on the PISCES operator and companies that would rather remain in a more bespoke, and that those two things will to some extent run alongside. Right. But also our hope is that the vast majority will decide that PISCES is a good thing to embrace, because apart from anything else, the more companies that are on a PISCES, between JP Jenkins and Asset Match, there are probably between 100 and 150 companies whose shares trade. We need that to be 1,000 companies.
Yeah.
If it becomes 1,000 companies, you've got 1,000 share registers that are aware of the process.
Yeah.
And some of those will be investors in other businesses.
Yeah.
And you've got a much bigger universe of companies for potential buyers to look at. So I think growing the space is crucial.
Yeah.
and that's sort of why I completely agree with Veronika's comments about the London Stock Exchange. But I think the important thing about the Stock Exchange getting involved is it will give the space a lot more publicity.
I was going to say it's profile as well, isn't it? I mean, at the end of the day, it's in everyone's interest to all be on the same page, isn't it? And I know with PISCES there is some. They're trying to get some tax incentives. Obviously, us being tax efficient, there are some incentives on the PISCES scheme. Which do you think they will help? There's no stamp duty, is there?
Yeah,
stamp duty is clearly a positive. The other one is, they announced a change in EMI rules.
That's very interesting.
And do you think that, are you already seeing interest from that side, from,
Yeah, what we're doing at the moment is we actually ran a seminar a couple of months ago, and it really was about kind of the general private markets, but I would say probably about 60% of the time was actually discussing the PISCES framework and how is it going to operate, and there is still so much unknown. But yes, we've had a huge number of questions, especially from companies. How is it going to affect them? And very similar to Asset Match, we're hoping we'll be able to run the two segments or two venues at the same time and use perhaps just a traditional match bargain facility. We're just in a consultations or starting the consultations with our existing portfolio of clients, and really just making sure what we are proposing and building actually fits the purpose, rather than just say, oh, okay, this is how it's going to run, these are the rules you pick. It's really about trying to get their views and see what the private companies actually need. I feel a lot of the initial talks out of the London Stock Exchange and FCA and HMT, there were very large advisors that were involved, and they don't really interact a lot of the times with the small businesses. So yes, wonderful to have these big names on the ticket to talk about the PISCES launch, but are these really the advisors that interact with those types of businesses? I had my doubts, and I feel like going directly to the clients and really getting their feedback and what they would find beneficial is a lot more important at this stage, so we can adjust the venues. Obviously, we have some hard requirements which we won't be able to get around, but just making sure that we fit the venue to have a purpose.
I mean, that's the key, isn't it, for it to be successful? I mean, what do you see could be issues? I mean,
Oh, I'm sure there'll be plenty.
That's always.
I mean, there will be teething problems, but is there anything that sort of stands out initially where you're like, this could be...
I'm less worried about the dealing side. I feel quite comfortable because we have those strong relationships with the brokers. Our tech is completely plugged in and embedded already with 55 brokers across UK. So that's less of a worry. What I'm thinking about is it's going to be the frequency on the reporting and how that's being checked, and who is going to control that flow of information. That is always the question. How do you regulate it enough but not over-regulate, or how do you not make it overly expensive? Because if you start, adding nomads and people that will then monitor these companies, that's extra cost as well. And how do you keep the market orderly?
It's difficult then to differentiate between going full public listing thereafter.
Exactly.
Well, it defeats that stepping stone environment.
Exactly.
It does.
Yeah.
How many operators do you think they're going to be under PISCES? And is fragmentation going to be an issue?
Oh, good question.
I don't know the answer to that. In an initial conversation we had, the suggestion was high single figures.
Okay.
So there's new ones coming into the marketplace?
Well, there could be. There could be. That will become clear through the course of the year.
Yeah.
I think only 20 people participated, really, or 20 entities or such participated in the consultation.
Yeah.
And obviously, we were one of both of us were one of those. But I think there is only about 4 or 5 that we know of, or that I know of, that are looking to apply for the license initially.
Right.
Yeah.
Okay.
No, I think on the whole we've got to embrace competition. More is good, and
good for the sector.
We're the two incumbents, and we've.
It's funny, LSE is almost the newcomer to the game, isn't it? In this space.
Yes, it is.
Yeah.
Nice to be there first.
Yes, and it will be an interesting. I had a conversation with somebody earlier today. The London Stock Exchange is only 2% of London Stock Exchange Group revenues.
Yes, I read this.
is.
They're a data company now, more
and
so.
Very much so.
And so this is going to be a rounding error as far as the London Stock Exchange group is concerned.
I'm not even sure they're going to be noticing it, but yes.
So, so I think we're clearly going to devote a lot more time, energy and expertise towards it than they will be able to. So I think, it's
Confident.
almost bring it on.
I like that.
We're quite excited, and I think having that framework rather than operate in that grey area is really useful because it gives us also a little bit of more of a framework, which we're not opposed to.
Mm-hmm.
It's good to know what is going to be required, but yes, it's the over-regulation that's always
That's
a
the key,
challenge.
isn't it, to make sure it's not over-regulated. We've seen similar with the SDI from the FCA, whereby there was a lot of greenwashing from companies, fund managers, and now it's green hushing because no one talks about it because the reporting piece is so onerous. Yeah, so what we don't want to happen in this space is exactly the same.
Yeah.
Precisely.
Yeah.
Well, exciting times. And we have actually got the London Stock Exchange coming on to our podcast.
We'll be
shortly.
listening.
So, yes, so that will be interesting for all of us. And
Maybe we can come and do the questions.
well, you never know, Ian. You never know.
follow-up.
But what we would love to do is perhaps in 6 months get you back on, and once we are live and kicking with it all,
seen
see
some
how it's all
auctions go
going.
through.
That would be wonderful.
So thank you both.
Thank you
both very much.
Thank you.
To hear more, tune in to either YouTube on video or all good podcast channels.
This is a podcast produced for EIS Platforms Limited, trading as growthInvest. It is not intended to be a financial promotion of any sort and is intended for financial professionals only. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early stage businesses are high-risk investments, and you are unlikely to be protected if something goes wrong. Don't invest unless you're prepared to lose all your money.